Hi, I'm Brien Lundin. I am at the Toronto Metals Investor Forum. It's kind of a pre-DAC gathering here before PDAC, and I have the great pleasure to talk with my friend Hugh Agro, who is CEO of Revival Gold. Hugh, you have an extraordinary project, extraordinary value, tremendous resource in the ground that's not reflected, I don't believe, in your market cap right now. Let's give our viewers a quick recap of where Revival Gold is right now.
Yeah, thanks, Brian. Revival Gold's advancing the Beartrack-Arnett Gold Project, which is located in the eastern side of Idaho, western United States. So great location. And we're working on a brownfield site with the largest past producing gold project in the state of Idaho. And what's really exciting about Revival Gold is the discovery rate. Over the last 5 years, we've put together the second largest discovery of gold in the United States in the past decade. So this is an impressive 4 million ounces on this project, and we're advancing into production in the first phase.
And your discovery cost for those ounces is, I can't remember the numbers, but it's extraordinarily low, isn't it?
Yeah, we've been running consistently at about $5 an ounce in the ground. So, we started out with a resource in 2018 of 2 million ounces, 2020, 3 million ounces. And in April last year, we put out 4 million ounces. So consistent delivery of growth in this deposit. It's a shear zone that's over 5.5 kilometers, 3 miles long. And we hit with every drill hole into that shear zone.
I'm trying, when I look at Revival, I try to figure out what I like best about the company. And it's really tough you've got an exploration play. You've doubled, not only a lot of ounces, you've doubled the resource. You've got kilometers of identified mineralization to expand on that. So the ultimate size of this resource, we won't even guess at the numbers, but it could be significantly higher. So you have the exploration play. But you're a development play that's ticking off all of the boxes right now. You have a PEA out, you've got a near-term, very achievable project or plan to go into production at a 75,000 ounces a year of gold with a capital expense that's easily achievable, I would think, for any company. The numbers have to just tumble tremendously well for that project.
Yeah, we're talking a bit about it off camera, but we've purposely phased this project. So we've got a first phase where we go back into production from the existing infrastructure. This is a big differentiating aspect about our story. And for a modest amount of capital, we'll produce 60, 70,000 ounces a year of gold. But beyond that, we've got a very large exploration story. And it's like two projects in one. Moving towards production on that first phase, open pit heap leach from the existing plant and site, and then continuing to explore and building out. And boy, we've got some super grades in our Joss zone now outlined over 1 kilometer of strike, 20 drill holes, just under 8 grams per ton gold in a core of mineralization. And at the end of last year, we drilled 200 meters below our existing block model and hit 11 meters at 10 grams, another 12 meters of 6 grams, all within 115 meters of 3.5 grams. So this thing is open. It's open at depth. It's open to the north and the south, and we're just going to keep drilling.
Do you find that that's almost a hindrance? I was talking about all the different aspects that I like about it, but the markets typically like a clean story. Are they exploring? Are they developing? Or are they open pit? Are they high grade? You're all of that. And I guess from some standpoint, it's a valuation play too, because you've got this huge resource that should be valued higher in the US in a great jurisdiction. And that's a backstop as well, because you're undervalued just based on what you have there in the mine plan you have there. So, the exploration is a sweetener, but how do you as a executive of the company, how do you handle that kind of what are we aspect of the story?
Well, I like to say we have our cake and we can eat it too. And really what we've done is, having come from big companies like Placer Dome and Kinross, and worked in the industry for over 30 years, I can tell you one of the mistakes we make is that we carve out these big projects and they're very risky as a result, capital blowouts. are common in our industry. And so what we've done is, with Revival Gold is focus on what we can deliver in the relatively near term while we've got this great gold price, move that forward into production, and that gives us an offset to these turbulent markets. And meanwhile, we'll continue to build out that bigger phase to the project. So really, we have our cake and we can eat it too. We've got exploration, we've got a project moving towards production, and we're doing all that in a great location. And listen, that's not lost on our investors. We've got 40% institutional holding, including some of the bigger names in the gold space like Donald Smith, Gold 2000, US Global, and these guys get it. It's a story that's got a ton of upside for the explorationists, leverage to 4 million ounces of gold, and the prospect of nearer term production through our first phase open pit heap leach.
Yeah, going through that value creation curve as you go toward production. If you ever get to that point, if a major doesn't come in to take you over.
I'll just say on that. I mean, we're not shy about telling people. We like to have the majors out. We've had several of them out, and a number of intermediates. We're happy to get folks under CA and bring them out to the project because we learn from them, and they learn about us. And of course, these times, it's a long gestation period before you get to a transaction with a major. But we want to know who's out there, and we want them to be informed. So we're not shy about bringing them out and keeping the doors open.
And of course, a major can come in and they can run their own numbers and they have a good idea of what the economics are going to be. But let's talk catalysts, because in terms of getting things down, kind of nailed down as far as the economics and the size, et cetera, you have some catalysts coming up in that regard as well.
Yeah, we do. First job in front of our team is the PFS, which is underway under the leadership of our VP Engineering Development, John Mayer. We've also got an updated resource coming together. Our exploration team under VP Exploration, Steve Priestmeyer's doing a great job with that and leading the team through that. And so those are the major catalysts in the near term here in the next few months, updated PFS, a PFS and an updated resource. And beyond that, for the remainder of 2023, we want to get back in exploring, adding to the oxides, building out the story and the mill material at Beartrack, all of that to follow. It's going to be a busy year.
So you will be drilling substantially this year?
I expect we will. We haven't finalized our plans yet. Yeah. We're waiting for the updated resource to get completed so we can optimize the drilling plans around that. But our team is working on that, and we'll have more to say in the next month or two about that.
And on that end, and we'll close on this, I believe, but let's talk a little bit about that exploration upside, because one of the things that whenever I look at the story, and just heard your presentation earlier in our session, is we are talking about kilometers of proven mineralized trend, proven mineralization, and going to depth. So there are lots of ways to expand the resource. Let's talk a little bit about the district size play that you have here.
Yeah, thank you for asking that question. The first thing to say is that this is an orogenic gold systems. These tend to be quite large, and they extend for upwards of 2 kilometers at depth. Yeah. We've got one drill intercept at 450 meters, 71 grams over 10 meters in the system, which is about the deepest we've gone so far. A lot of people would just go chase that. But the type of system we have could go another 2 or 3 times deeper than that. Now, listen, we've got to be practical. We don't want to over dilute, as I mentioned earlier, and so we're being pragmatic about how we do our drilling. But those are targets that'll come. The entire gold endowment in our area, in our valley, is known to be over 5 million ounces to date, extensively placer mined in these valleys. And I think we're just on the cusp of something brilliant here. Idaho as a state has 28 million ounces of undeveloped gold, and it's right next door to Nevada. There's no reason in my mind why it can't be the next Nevada when it comes to gold production. Yeah,
it is a very good jurisdiction, very favorable to mining, great geology, and lots of upside. And again, the majors can see that. They know that mineralization can go to depth. That's the kind of mystery upside that they like in a project, in a company. Hugh, thank you so much for bringing
Thank
us
you,
up to
Brian.
date.